Good morning, good afternoon, and good evening. Welcome to the 34th Hodlnots Weekly Warm-Up. I'm John.
I'm Vicky.
And these are some of the crypto headlines over the last few days. Altcoin season is dead. Expect shorter cycles and violent rotations.
The US Senate votes to ban CBDCs in House bill that may face trouble in the House.
Spot Bitcoin ETFs extend the inflow streak to 5 days for the first time in 2026.
And Ethereum warns users as USDT dust attacks jump 612%.
So for more on all of those and so much more, let's get into some of those stories.
And the first one is that USDC market cap nears $80 billion amid capital flight in the UAE. So the market capitalization of USDC stablecoin is approaching a record high of near $80 billion as demand surges in the Middle East, with one analyst linking the spike to capital flight from the United Arab Emirates. So according to data from CoinMarketCap, USDC's circulating supply has risen roughly to 79.2 billion, marking a new all-time high for the dollar-peg stablecoin. The stablecoin's market cap previously hit a high of below 79 billion in December last year. So the increase comes after supply expanded by billions of dollars in recent weeks. Circle, who actually is USDC, has accelerated minting to meet this demand, notably printing 2 billion in USDC in just 2 days in early March of this year. So the stablecoin's market cap stood at just over 70 billion in early February and 75 billion earlier this month.
That's big. That's big competing with Tether. Now, according to one crypto executive, altcoin season is dead and expect shorter cycles and the violent rotations in coins. Now, we've often said this in the last year or so as we trade what we see. We don't expect the market to behave in a certain way. Well, let's see. Traditional altcoin cycles, which featured broad market rallies called alt season, are now a relic of the past as new crypto market dynamics are setting in. According to Andrei Grashev, he's the managing partner of DWF Labs, a crypto market maker and investment firm. Too many tokens are competing for limited capital and mind share, and a smaller number of market participants, along with crypto exchange traded funds ETFs, is altering market dynamics by trapping liquidity, and these are the driving factors for the disruption. Now, institutional focus on large cap digital assets like Bitcoin, Ethereum, and tokenized real world assets are also diverting capital and attention away from altcoins, he said. The capital out there is not going to keep expanding fast enough to support all of the tokens out there, roughly about 37.8 million unique tokens. He says that means shorter narrative windows, more violent rotations, he's referring to rotational capital, and less room for weak projects to survive on hype alone. The market is moving away from broad altcoin rallies and towards more selective moves in specific sectors. 38% of altcoins are near their all-time lows, according to CryptoQuant analyst Darkfast, who said that this is worse than the post-FTX market crash. Liquidity, he says, is becoming increasingly diluted by the growing number of projects and tokens entering the markets. Over $209 billion has exited the altcoin market over the last 13 months. The altcoin market cap briefly tapped a high of 1.19 trillion in October last year before the market crash dragged it back down to 719 billion only. So, ladies and gents, we know we've spoken about this, plenty of coins out there that are competing for the capital out there. So, traditional cycles, are they a thing of the past? We trade what we see.
Correct. We've been seeing that for a while now, and that's why we adopted that trade what we see, and it is working because there are popping crypto coins here and there everywhere. So another thing that's popped actually in the head is Boris Johnson. So crypto leaders have pushed back after Boris Johnson calls Bitcoin a Ponzi scheme. So several prominent figures in the cryptocurrency industry have pushed back against former UK Prime Minister Boris Johnson after he described Bitcoin as a Ponzi scheme in a newspaper column. So Johnson, who led the United Kingdom from 2019 to 2022, wrote in the Daily Mail that he long suspected Bitcoin is a giant Ponzi scheme, warning readers against putting money into the digital asset. So the comments quickly drew responses from well-known voices across the crypto sector, including strategy co-founder Michael Saylor, Tether CEO Paolo Ardoino, and early Bitcoin developer Adam Back. So Saylor rejected Johnson's characterization in a post on X, arguing that Bitcoin does not meet the definition of a Ponzi scheme. He said a Ponzi scheme requires a central operator promising returns and paying early investors with funds from later ones, and Bitcoin is not a Ponzi scheme. So Adreno echoed Saylor's comments. Meanwhile, Adam Back, the CEO of blockchain technology firm Blockstream, joined the discussion with briefly applying on X, and he called the former prime minister by his nickname as Bozza. So Adam Back did not like that comment at all. And we all know Bitcoin is not a Ponzi scheme because, like Saylor said, it doesn't fit the definition. And you know what? Let Boris Johnson think what he wants, really.
Absolutely. We just want to make sure that current and past leaders are not diluting the narrative out there. Speaking about narratives and dilution, we're actually talking about an increase. Spot Bitcoin ETFs are extending the inflow to another 5 days for the first time in a row for 2026. US spot Bitcoin exchange traded funds ETFs logged their first 5 day inflow streak of 2026, bringing in roughly 767 million this last week. Now, the funds recorded 180 million in net inflows for Friday alone, extending the run of positive flows that began early in the week. The strongest day of the streak came on Tuesday when spot Bitcoin ETFs attracted $250 million, according to data from Soso Value. Now, the last time these kind of funds saw a comparable streak was in late November of last year when spot Bitcoin ETFs logged 5 consecutive days from November 5th to December 2nd, bringing in about 284 million. All right, so this is a good thing. All right, we're starting to see this. We'll talk more about this in the Bitcoin chart. One thing to bear in mind, ladies and gents, is rising tensions in the Middle East and volatility in energy markets are also weighing on global risk sentiment. According to BitUnix analysts, escalating conflict around the Strait of Hormuz and elevated oil prices have increased macro uncertainty and reduced expectations for aggressive Fed Reserve rate cuts, prompting investors to focus on short-term liquidity rather than long-term risk exposure. Ties in with trade what you see.
100%, yes. And we're going slightly back to the US now, which the US Senate quite sneakily has voted to ban CBDCs in housing bill that may face trouble in the House. So, how they did it, a major housing bill just passed by the US Senate carried a little section in there basically tacked onto the end of that housing bill that would ban the Federal Reserve from issuing central bank digital currencies or CBDCs until the end of 2030. So, initiative to ban US Federal Reserve from issuing a government-run digital dollar has been approved in basically overwhelmingly by the US Senate, but it's tucked inside a housing bill that may run into headwinds in the US House of Representatives. So it's actually unclear what the House will do now with the approved Senate bill, or whether President Donald Trump would live up to his claim that he won't sign any legislation until he has voter ID laws. So crypto is being bounced around like a ping pong at the moment in the US with, tacked onto bills, and this is debated and that's debated and he said, she said. So we'll just have to see if it passes or not. But there is a really big push from the Republicans not to allow the central banks from issuing that digital currency. So we're going to have to wait to see what happens over there.
Absolutely. A lot of these stories, ladies and gents, are follow-ons from previous stories, and this next one as well. And we've spoken about Bitcoin mining. We've seen a bit of a drop and a bit of a turnaround where, in terms of electricity costs, a lot of these miners are starting to shift over to AI data centers. And why? Because this at the moment is digital gold rush. All right. So this is a debate around Bitcoin mining and this has emerged of whether a continued shift by Bitcoin miners towards AI or artificial intelligence could impact the network's security and its role as a store of value. While some argue that miners leaving the network would leave it more susceptible to a 51% attack, others argue it will simply trigger the Bitcoin network to rebalance itself as designed, making it enticing for miners again. Now, according to one crypto trader, Rand Nuna, AI has killed Bitcoin forever. He said on a post on Sunday, arguing that it has become arguing that it has become Bitcoin mining's biggest competitor because both industries compete for this electricity. AI is willing to pay much for it, he added, explaining that Bitcoin mining revenue per megawatt is around $57 to $129, but AI data center revenue per megawatt is up to 8 times higher at around $200 to $500 for the same amount of electricity expended, which is why miners are starting to pivot. So, are we going to see a shift in that? Well, AI is here for a while. It's going to stay. We see some talk of bubbles bursting around AI, but as it's being implemented and is becoming more lucrative, that means less Bitcoin will be mined. Now, apparently, according to data, the very last Bitcoin will be mined in about 114 years. But if this continues in this trend with Bitcoin miners pivoting to AI, it'll be much longer. But again, we won't be around. So who cares? We trade what we see.
Correct. And AI is not going anywhere. It's increasingly getting into every sector, so it's really inevitable that it's going to be doing that as well. So we just need to live with it, and like you said, trade what we see. So this is a fun story next. It's about Elon Musk's X. And he has created, there's been whispers of it, but he's created a money debit card. And it was spotted in action in a new video online this weekend. So here I go again. Elon Musk's X Money payment service may have gotten a major boost as a user shared a video making a transaction using the service's debit card. So on Thursday, user Josh Wood took to the social media platform X to share a video of him supposedly making a transaction at a chain gas station. So recorded for posterity, Wood said in the caption, showing the metal card touted by Musk. He then thanked Tesla Inc. CEO, which is Elon Musk, as well as actor William Shatner, actually, for beta access to the platform. So the card, which appears to be made out of metal, features Wood's full name as well as his official X handle, something that has been touted by Musk and Shatner in the past. So Elon Musk is planning to launch a new payment platform called X Money in the beta form to select users from April this year, and Bitcoin will feature heavily in this payment process. So that's how the crypto fits into that. So, in announcing a planned partnership between X Money and Visa more than a year ago, then CEO of X referred to the platform as a so-called everything app, a reference to the kind of all-in-one digital product that combines messaging, social networking, shopping, payments, and other services in a single app, such as China's WeChat. So, in a brief post on social media on Tuesday, Musk described the platform as intended to be a place where all the money is. So that's kind of fun that we actually brought that story to you last week or 2 weeks ago that X, you'll now be able to use Bitcoin on X to pay for things. So there's a little debit card coming out too, which is kind of fun.
Absolutely. Let's see how those beta tests continue with those select users
Mm.
until we perhaps get access to that as well. In the meantime, Mastercard is also playing ball and they're launching their new crypto partner program with over 80 industry leaders. So if you guys have a Mastercard, this might be for you. Global payments giant Mastercard has launched a new crypto-focused collaboration initiative, bringing together dozens of companies across the digital asset and payments industries platform to build blockchain-based payment infrastructure. This program is aimed at accelerating the integration of digital assets with traditional payment networks. Now, we do know a lot of people still prefer credit cards over something such as an X payment option, and we'll see which really takes off quickest. But this program is trying to accelerate that integration. Now, the initiative brings together more than 85 companies across crypto and financial services sectors to collaborate on blockchain-based solutions for payments, settlements, and financial infrastructure, and is designed to connect crypto native firms, banks, and payment providers so that they can develop interoperable solutions that combine blockchain technology with Mastercard's global payments network. Now, these applications aim to reduce settlement times, lower transaction costs, and enable more efficient treasury operations using blockchain rails and stablecoins. Now, we've touched on similar stories in the past, and I think this will be very much part of the narrative going forward, whether it be through a social media platform or the integration of blockchain technology and traditional finance platforms as well.
Yes, I've been using mine for a while now and I love it. You just send your crypto over to the card and tap away, which is actually a little too easy sometimes. So maybe that's a bad thing. But anyway, now the next story we have talked about before, and you, John, have actually talked about this a few times. And Ethereum has actually now come out and warned users as USDT dust attacks jumped 612%. So, following the Ethereum Fusaka upgrade in December, there has been a significant increase in address poisoning scams, particularly targeting stablecoin transactions on the Ethereum network. So, dust transfers, where basically small amounts of crypto are sent to trick users, have also seen a sharp rise due to fee reductions after the upgrade. So I think we've all noticed possibly that the Ethereum network's fees are lower, and this is actually what is allowing this to happen, really. So the number of USDT transfers under 1 cent went up by 612% from about 4.2 million to 29.9 million. So a similar thing happened with USDC, where the number of transactions went from 2.6 million to 14 million. And that was a 473% increase. And dust transfers that were mostly in Ethereum and DAI went up 470% and 62% respectively. So the first one saw 65.2 million new transfers. So these are less than a cent transfers being transferred, trying to trick people, allegedly. So address poisoning campaigns insert fake addresses whose beginning and end characters are nearly similar to the genuine ones into the victim's trading history, hoping users will copy them when sending funds. And unfortunately, that has happened, and John has done quite a few stories about that. So we really often become wallet interfaces display only shortened addresses. The spoofed entries will appear genuine. And I know, we always said, oh, look, check the first couple, check the last couple, but now please check all of it because this is what's happening. So these scams have resulted in millions of dollars in losses for victims, emphasizing the importance of verifying destination addresses before sending the funds.
All right. Always double check, ladies and gents. The reason why we include these stories in these weekly warm-ups, just to remind you as well. Now, let's head over to down under to Australia. Have you guys ever heard of a finfluencer, as in a financial influencer? Well, now you have if you haven't before. Australia is warning of these finfluencers and of AI. Why? As the Gen Z crypto ownership is now reaching about a quarter of the population. Australia's financial regulators urge young investors not to rely on social media influencers and AI chatbots to make financial decisions, according to the study that also found out that 1 in 4 Gen Zs invest in crypto. Now, the Australian Securities and Investments Commission, ASIC, posted the results of a survey on Sunday, finding that Gen Z has high levels of trust in often unreliable sources, which has contributed to riskier financial decisions. Now, Money Smart's Gen Z study found that while Gen Z has a strong appetite for reputable and trustworthy financial content, many struggle to find it, and their search often leads them to sources designed for engagement rather than accuracy, according to the ASIC report. Now, the latest survey conducted between November 28th and December 10th last year, with 1,127 respondents between the ages of 18 and 28, found that 56% of Gen Zs said that they somewhat or completely trust financial information on social media, with 52% of them saying the same for finfluencers, social media influencers primarily covering financial investment niches who appear well versed in finance. AI, however, ranked as the most trusted source at 64%. Always do your own research. Don't necessarily trust the hype. If you don't know how to trade or where to find the information, well, Hodlnots is the place to go. Tell your friends in Australia and everywhere else. Tell those Gen Zs. Into the last story.
So the last story is actually a lesson in slippage, basically. So Aave is to launch Aave Shield after $50 million of token swap was mishandled, or there was a mishap with $50 million. So decentralized finance protocol Aave said it's introducing a new feature to block swaps with a price impact above 25% after a user lost $50 million in a trade while interacting with Aave's interface last week. So they said we're soon deploying a new feature, Aave Shield, which provides more protections for users who use the swap feature in the Aave interface, aave.com. So Aave said users would need to manually disable the Aave Shield protection feature to proceed with high risk trades. So what happened was the incident occurred on Thursday when a user attempted to swap 50 million.4 worth of USDT for Aave via decentralized exchange COW swap or cow swap, but they only received $36,500 worth of Aave due to lack of liquidity and other infrastructure failures, generating a loss of over $50 million. So what's happened just briefly is, if you have used a decentralized exchange, they have something called slippage, and they warn you that your transaction might cause this coin because of lack of liquidity to either spike up or spike down. So they warn you that it either won't go through or you might not get the price that you thought you were going to get. And this person went, tick, whatever. And his 50 million turned into 36.5 thousand. So that was not good. So basically, Aave is saying you are going to have to turn that off manually if you don't want, if you want to risk it. So that's what they put in place. So part of the loss was a result of maximal extractable value bot that executed a sandwich attack on the user, profiting nearly 10 million. So just if you use a decentralized exchange, one of them, just have a look at that little slippage bar and just make sure that it's actually not going to slip too much, because what happens is you don't get the price that you thought you were going to get. So a lesson for all of us, I think.
Perhaps more on that in the Hodlnots Happy Hour Hangout later this month as well. But that's it from the crypto news. Let's talk more about the Fear and Greed Index briefly and then head into Bitcoin.
Yeah, well, as we saw, Bitcoin is actually gaining back some of the percentage it lost earlier this year. So it is, John will show you in a minute where it is. And also, many of the alts are running now. So the Fear and Greed Index is actually reflecting this, and it's now sitting around 23. And that is finally out of the extreme fear area of 5 to 10, where it's been for weeks. So it is reflecting the market. And John, let's see what Bitcoin's doing and why that's happening.
Absolutely. Cool. So, what's going on there at the moment? Let's just turn that off because otherwise it gets confusing. So, just having a look at what we were speaking about last week on Monday, where we were talking about how we needed to see Bitcoin close at least above that 71.72. And then I said ultimately we need to get past, or Bitcoin itself needs to close above this historical 74, 75,000 that was previous strong support that is now acting as resistance. And for those of you who are Hodlnots, or even those who are Hodlfire graduates, you'll see that there is something else that's needed to get it past. But once we see a day candle close above the 75,000 range, we are definitely going to be exploring some of these higher values. Besides the psychological 100,000 that's up ahead, we are going to be encountering some resistance along the way. But is this the signal for Bitcoin to finally start to be breaking out again? We've had a couple of days, a week or so, of Bitcoin moving up, but at the moment sitting against some heavy resistance. So if you guys been following the hodl fire trades in terms of buying or adding Bitcoin to your trades, you might have gotten in somewhere around here, and you would be up. And hopefully, same would follow for a lot of these other coins, whether it be the Ethereums, whether it be for the Solanas as well. But at the moment, market seems to be turning. There's some really great coins running. There's some great coins running for the hodl fire trades of the last couple of weeks. But a lot of coins are really moving nicely today. We're seeing a movement in a lot of the meme coins. So Burma, Bonk, Whiff, Nero, and a few others as well. But scalp traders, you guys can be able to trade in any sort of season. Hodl fire traders, we're going to start to see a lot more action as well in the short term. Remember the story we were talking about, short-term liquidity really is the focus. There's a lot of rotation. It doesn't seem that the Bitcoin 4-year cycle is still a thing anymore. And altcoin season, well, we're going to trade what we see. Until Bitcoin breaks above this over the next day, expect some turbulence until it does. All right. Otherwise, we're going to should see some nice movement up again for Bitcoin, and a lot of these altcoins are going to run. So while we do tell you guys what we kind of seeing for the next couple of days, still you have to trade what you see, and that is really the narrative for that. But we're quite excited to see Bitcoin close up above 75,000, hopefully in the next day or so. Meantime, lots going on. What's happening over in Hodlnots land in terms of all the different calls happening this week, Vicky?
Yeah, there's a lot of calls this week again, and there have been a lot of other kinds of calls in the den, and definitely the hodl fire as well, because as you said, doesn't Bitcoin's running, but so are some of the alts, and then Bitcoin doesn't run and the alts run. So see, trade what you see. But in the lodge this week, which is actually also in the Certified Academy. So if you miss what I'm going to say, please have a look in the Certified Academy because most of these calls are there. So as usual, we start the week off with our self-paced course call at 12 p.m. UTC, and that is for new students that are on chapters 1 to 3. So please jump on there if you're doing the self-paced course. And then tomorrow starts off with another self-paced course at 4 a.m. UTC. And that is for anyone doing any chapter or any module. So jump on and get some help if you can't attend the first one. And then there is a large call as usual at 6 a.m. UTC tomorrow. And Wendy will be doing that. And she's had some great topics as of late. She did one on confidence last week. So I think a lot of people got a lot of that, or a lot out of that one, because the confidence with the market up, down, up, down. What do? Well, you trade what you see. So trade what you see. Don't take the trade if it's not there. That's the thing. Don't wish and pray and hope, but see if it's going to stop, don't trade. So trade what you see. And then after that one, we have our graduate hodl fire call. And I'm really excited to do this one because coins have been running. So I want to see who's traded what and what's happened over the weekend. And that is on Tuesday, which is the 17th. And that's at 12 p.m. UTC. And that is for all the people that have done the hodl fire course, can jump on that one, who have the graduate chat. And then nothing on Wednesday. Oh, actually, no, that's not true. On Wednesday, 8 p.m. UTC, there is another hodl dot call. So these are for the people that are focusing on scalping, doing the 3M challenge. So if you need a little bit of help or you want to jump on and ask a question, that will be 8 p.m. UTC on Wednesday. And then we are having another hodl fire call for the people that have the hodl fire indicator. So not for the hodl fire graduates, or they can jump on too, obviously, but anyone that has the hodl fire indicator can jump on this one, and that is at 6 a.m. UTC. So jump on that if you're not sure what to do. If you haven't done the course yet, we'll talk about that, but there is another course next week already. So jump on that one. But if you really want to know how to use the hodl fire to its best advantage, do the course, and then you can jump on the other calls as well. And then we'll have our second hodl dot call at 7 a.m. UTC on Thursday, which is Liesel's doing that one. So it's always, like I said, great to see other people doing it, just getting another point of view from someone and have a little chat with her. And then we end the week as usual with the second of the self-paced course calls. And this is for people that are on chapters 4 onwards. So a little bit of a different schedule this week. But like I said, next week we do have another hodl fire course for those people who haven't done it. And that does start at 1 p.m. UTC. So for Europe and the North America, South America, so that side of the world, and that is on the 25th and 27th next week. So lots of things coming up.
As well as the Hodlnots Happy Hour Hangouts, the first of this year, the
Yes.
first one of the quarter. That'll be Wednesday, but more details to follow later this week. And that'll be an hour-long expose as we delve into some of the topics we've covered over the last couple of months, really, and some other exciting things, but more details to follow. Speaking of, it's a busy week, lots going on. What are we ruminating on this week?
Yeah, well, as you might have noticed, the we are green and orange, peach, whatever it is. So green and orange this week. Tomorrow is St. Patrick's Day, and I think we're all a little bit Irish on St. Patrick's Day. So, in honor of St. Patrick's Day, and really with the market being like it is, and our narrative for a while now has been trade what you see. If you haven't guessed, we've said it a few times. Trade what you see, and don't be greedy. Because really never try to get the top or the bottom because you'll miss the trade, you'll overshoot it, it'll retrace. So basically, trade what you see and don't be greedy. But in other words, in honor of St. Patrick's Day, never iron a four-leaf clover. You don't want to press your luck.
I wonder how many people got that one. Well, that's good. Also, if you're Irish, drink what you see. The rest of us, we trade what we see. And until next time, ciao, ciao.